All right, so good. So once we can create a lower wick, which it create a minor wick here, but I need, maybe a bigger wick than this. But if it starts to break the high, I'm gonna go with a entry risking about, you know, 0.50, 50 cent lot for the market to continue to push price bullish. All right, so let's get back to, come on and stop playing around with me. Hate it when you do this, Hate it when you do this. Okay, great. Nice that it is pulling back. So I think if it starts to break the high now, then we should continue to push bullish. If it starts to break above the high of the previous candle. Alright, so let's just be patient and wait for the break. So if I don't get what I am looking for, alright. So as you can see here, we start to break above the high of the previous candle. So I'm gonna enter a buy here, and I will be anticipating the market. Seeing that we had 769, I think we can push up to about 138. I think we can target 139 flat. I think we can target 139 flat, and this entire move, it's like a 24 pip move. So cut this on the 15-minute time frame. I'm gonna do is to bring these levels over to the 15-minute time frame. So clone 15-minute time frame. And as you can see here, we are breaking above the wicks, so I'm gonna enter by here. Alright. So I'm keeping my stop loss below the current candle, and I am really anticipating the candle to respect its low and continue to push bullish based on the fact that we are in the NY open and there's a lot of volume in the market at this point, and currently we are pushing bullish, so let's just make a minor adjustment. Let's just make a minor adjustment to our stop loss. Come on and stop playing around. Alright, modify. So what I am actually doing now, I'm just gonna bring my stop loss right below the low here. So if we are going bullish again, there is no need for this candle to pull all the way back down here to break its own low, seeing that it came down already and respect the low of the previous candle. Alright, and currently we are trading above resistance on the 30-minute time frame, which gives us strong enough confirmation that we are pushing bullish. So if it starts to break the low, then there's a high probability we're gonna get stopped out. Alright, let's look at this on the 15-minute time frame to see where we at now. And this was exactly 10 pips. So again, I'm gonna leave the position, but if I start to get a 15-minute candle to close against me, then you just have to manage risk. You just have to manage risk at that point. And I think at this point now, what we can actually do is to secure most of our position. Alright, at this point we can, let's say we are going to secure the $100 and just leave the rest to run. Alright, and this again guys is just simple price action in the forex market. The most important thing with this trading strategy is that you really have to be patient. So what I'm gonna do now, I'm gonna secure 75% of the position. It should be probably about $100, or less, I guess. And what I might also do is to modify my overall take profit, seeing that we are pushing bullish. You know, so let's do 139,500 to see if we can actually get to that target. Because sometimes the thing with GJ, whenever I start to move, you will get some pretty decent pips. Alright? You will get some good pips. So what I'm going to do also, I'm going to move my stop loss to entry. I'm going to move my stop loss to entry. So this trade is now completely risk free. So if the market should pull back and stop me out, would have made a lot of pips. Alright, and just leave the rest to run just like that. So nice and easy. If we should continue to push bullish, then you know we can make some extra money. And I think at this point, you know, we're up 3% for the week already. So what I can do now is to close another 50% of the position. You know, let's close 70. Because you always want to take most of your position off the board. Very, very important. You know, and just leave a small position to run. So if we continue, then we can make some good pips. But if not, it is what it is. But as I said to you guys, it's just price action. What I focus on is candle breaking and closing above the level with clean candles to the left. So I trade from range to range. Because I always ask myself, why is price leaving my area of consolidation? We have consolidation here. Why price is leaving here? You know, so you always have to ask yourself that. Why price leaving this consolidation? If you look at the time, you will notice that we are in a high volume session. There's a lot of volume in the market, you know. So there's a high probability price should be pushed to our overall destination. You know, so what I might do here, if this candle close bearish, I might just exit the entire position. Come on and stop playing around. You know guys, so the trading strategy is simple. Pretty simple. You know, so what I'm gonna do here, I'm gonna close the entire position. Alright, I'm gonna close the entire position. I know the probability is there for us to continue to push bullish, but again, from a break and retest standpoint, what you notice to create a high, we pull back from support to create a new high, or we now pulling back to form some form of support to continue to push bullish again. So this is what I am actually visualizing based on highs, lows. Highs, will the market pull back to form a low? Alright, and it makes perfect sense for it to retest this area for us to continue to push up. You know, so get out with my profits. So again, whenever you're trading the forex market, you always have to look for a good setup. Try and focus on the same setup every single time. If you can focus on that setup, which you know have a 70 to 80% probability, then it simply means that you know you can have a successful trade. And as I can see, the market is still pushing bullish. Damn, this not play, you know. So just a recap of the trade we actually took. We took overall, you know, probably about 5 trades. Yeah, we took 10 trades. 10 trades we took. We don't take so much trade. I think the thing with MT4, when you close partial, it count it as one trade as well. But what I want you guys to do here is to look at the losses, how they were managed. Wow. $57, $55, $48. And I want you guys to look at the winners. Keep losses small, maximize on the big move. 107, 75, 110, you know, 70, 28. This was closed on one of these positions right here. We have 70 here that will close partial and another 70 here. You know, so overall we had 2 loss and, you know, quite a few wins. And we also manage risk, and we're up 3.76% for this week. You know, so this was pretty good. This was a pretty good session. And this is solely price action, and as you can see here, price would have pushed all the way up and hit a full take profit at you know, 139,500. So currently we are trading above, you know, 139,400, and we push all the way up to 139,735. All right, so again, the bias was bullish. Just imagine holding the position from here. You know, holding position from here to here. That's 158 pips basically. You know, so that's as it relates to trading the forex market using price action. The most important thing with this strategy, you just have to be patient. Sometimes you will misplay, but trust me, whenever you catch a good setup like this, you will make some good pips. Just always remember that. So it's always good to just be patient and just wait on the market to farm price the way you want it to, because you know that once it farm price that way, you know the probability of price going in your direction. All right, so I will be wrapping up on the simulation now. It will be posted in the database so you can actually go back and watch it at your convenience. You know, so let me know if any of you guys have any questions before, you know, I wrap things up. So let me know if you guys have any questions, any concern, anything you would like to ask before I go. All right, so for the purpose of a simulation, this is called software 4x, and it is a bit different than the regular account. But what I'm gonna do, I'm gonna do a partial close for PC, so you can actually see how to go about, you know, closing partial position on your computer. So I'm gonna do that, and I'm gonna upload it to the TME course section where you can actually watch that. So more likely it would be done tomorrow at market open. So I'm gonna do that and send it. But there is also a video in the TME course section that actually shows you how you can actually go about closing, you know, partial on your smartphone as well. So you can check that out. Yeah. So let me know if anybody else have any questions. Session. Yeah, leading up to the close. But I say, go ahead. All right. All right. So the software is actually a paid software. It's actually a paid software. So FT. Okay, software 4x. That's the name. Software X. Trying to find it. Let's check. Don't even remember the name of the website, but I think they have it here on the videos. Show down. Let's see. Account. So I'm not seeing it here, but let's check out trade with Monty. But the thing is, you can also do back testing on TradingView, but TradingView is a paid for thing monthly. You know, it is paid for on a monthly basis. So you can actually do it on that. Yes, so it's soft forex. All right. So this is all right. So for trading view now, all you have to do, let's remove join here. This is a replay button, so all you have to do is to just click the replay button and just drop it here, and it will cut out the future things that would have happened in the present. So it will take you back to the past. Take for example, now you came to the chart and you're currently looking at a setup right here. You have your support, all right, and you also have resistance, and price breaks and close above your level. And you're like, okay, this is a setup that I used to. I look to the left here, I see that we have two nice clean candles here. And you know, and take for example, you're looking for a swing trade at a 18 pip stop. You know, so you all you have to do, take for example, you enter a position here, and you know, you have your stop loss down here and say, okay, I'm looking for price to continue to push bullish based on a long-term play. You know, and then you just click the play button and price will just form. You know, you just allow the market to form price. So this is the thing, but I think for the free version, they actually give you they actually give you you know, limited amount of time to play around with it. I think they actually give you limited amount of time to actually play around. So this is the thing with it. You just go back and you say, okay, I want to cut out, you know, select replay, and you say, okay, I want to identify my session. You know, you want to identify a session. You come to the chart, you know, just the same as here. You just go back and looking for potential plays, and you just go ahead and cut it off. So you came to the chart, and remember we were looking for buys above this area, 152 200. All right. So all you have to do, again, you come to the chart, you identify your resistance, and you go ahead and identify your most recent support. So you're looking for sell below here and buys above. But I think for longer term investment, it would best to get the soft forex software. You know, because you buy that and you will have access to that for life. You know, but TradingView is a paid monthly thing, you know, so that's that. So remember, we're looking for price to break above this area. So you come to the chart and you're like, okay then, you know, I'm just waiting for price to form and to break above or below to look for potential buys or potential sell. All right. So at this point, you see that you got a candle to break and close above the level. So you look to the left. This is a minor resistance here. You know, so I was looking for price to get solid continuation, for us to get solid continuation, based on the fact that we were actually trading in a range for quite some time. You know, so I was looking for price to break above 150 200 to continue to push bullish. All right, which indeed we got the confirmation. You know, so take for example, now you say, I'm gonna enter a buy at the break of the high here. You know, you're gonna enter a buy as a new candle start to break above the high, which indeed it did. You know, it did, and we get solid continuation. You know, we got solid continuation. Pretty much, I think these are the only drawdown. I don't think price came back in the area. These are the only drawdown. You know, and the market overall from that point until now, the market push. How much people actually push? Probably about 400 pip, if me not lie, or 300 there about. And the market just push. So most time you're gonna get play like these, but as I said again, trading view is either you want to pay for it monthly, you know, which it will remove the ads and give you the option to go back on the replay, or you can actually get the software simulation. You select a time frame so you won't actually see what would have taken past, what would have happened in the future. You're just selecting a time frame and trade from that time frame until when you choose to stop. So I think if for person who are really serious about forex, then it would be actually best to get the soft forex software. And I think we tap 156, don't it? We tap 156. We tap 156, You know. So if you are a day trader, guys, if you are a day trader and you are looking to hold trade for weeks and days, then if you are taking this trade from here, trust me, you would have made some serious gains. You know, you just work with the confirmation you got. So as I'm saying, I'm still gonna do scalp, but for longer term play for me, I find that I am more competent with day trading. The 30, the 40, the 50 pip, I see that I am more competent with that. The thing with scalping the forex market is that you are using a tight stop loss, and whenever you're using a tight stop loss, which is also known as aggressive stop loss, there is a high probability the market will stop you out. Because this trade right here, I actually enter this trade. Both trader actually enter for GJ and GU, and I got stopped out by about 2 pips based on aggressive stop loss. So what I am doing now is to use a more passive stop loss, meaning I am giving my trade breathing space. Because the thing with swing trade, you're gonna get drawdown at some point. So you don't want your stop loss to be too tight with the high probability of you getting stopped out. And at the same time, you don't want it to be, too big where the trade gonna pull back and you're gonna go in a big drawdown. So you really have to find that balance between an aggressive and a passive stop loss. So take for example, if I was looking for a longer term play, I'm not gonna use a 40 pip stop loss. I might look on the 1 hour time frame and say, okay, based on what I am looking at on the 1 hour time frame, and if we are pushing bullish, then this 1 hour candle should not break the low of the previous 1 hour candle here at 22 pips. So for longer term play, I might use most 30 pips if I am doing day trade or swing trade, but I don't think for me I'm gonna go beyond that, because if you're gonna say I'm gonna use stop loss below here, we know that if the candle start to close back in the range, there's a high probability it will push bear. So take for example this 1 hour candle close back like this. We know that at this point we should be taking off some percentage. Worst case scenario, if it breaks here, we know that, hey, our stop loss might get hit, because again, this play would be known as a fake out, because candle break above and then it break and close back below. It simply means that the market is not ready to break to the upside. All right, so you just really have to find that balance with placing your stop loss. So I think a good option would be for longer term play, you can use a 1 hour time frame to place your stop loss, and also the 30-minute time frame as well. I don't normally enter trade on the 4 hour time frame, because you see the thing with the 4 hour time frame, person do trade it on the 4 hour time frame, but your stop loss will actually be a lot bigger. Alright, your stop loss will actually be a lot bigger on the 4 hour time frame. So take for example, you're saying, okay, I'm waiting for this H4 candle to close here to take a trade and keep my stop below the previous H4 candle based on the fact that, you know, we have support here, no bottom wick, so there's a 50% chance we'll continue to push bears. But at the same time, you're wasting all of this area. You know, this is a 72 pip stop. You know, so I don't trade on the 4 hour time frame. Worst case scenario, I use the 1 hour, and the 1 hour is a pretty good time frame, you know. So again, you can use the 1 hour to place your stop loss based on day trade or swing trade, and also the 30-minute, because again, you're gonna get play like these where you're not gonna suffer any drawdown. You get in and the market just continue to push in your direction. You know, but as I said, whenever you get big plays in the forex market, it will consolidate, then you get a nice breakout again. You know, then you get a nice breakout again. So you just have to find the balance between that. Even if you took an entry here based on the fact that this candle create a lower wick right here, I say, okay, I'm gonna keep stop loss here at 15 pip. Pretty much you wouldn't have suffered any drawdown, you know. Let's look at it on the 15-minute time frame. Yeah. So on the 15-minute time frame, came back in the here, create a lower wick. So yeah, so you would have been in drawdown overall for probably about 30 minutes or less. And then the market just continued to push bullish. And then at this point, you wouldn't even suffer any drawdown. You know, if you had took entry here on the break of this high, well, this candle came back and tapped the here, but you get a nice continuation. You know, so even with price forming support here, you could have took a entry here and catch this move. And if you're looking for longer term play, based on the fact that we start to trade, you know, above this level here, then it makes perfect sense for us to continue bullish. So you just have to find that balance. But for me, longer term play, I'm going to be using the 30-minute time frame and the 1 hour time frame, and I will put my stop loss in a safe area, not all the way down here, you know. You know, say if I take a entry here, I might keep it like a pip or two below this support here. And I would be really anticipating the market to respect this support and continue to push bullish. You know, again, 22 pips. Worst case scenario, I might go down to about 30 pips. But, you know, you don't want to waste any room, because if this candle starts to break here, you know that, hey, it is disrespecting the low of the previous candle, so it increases the probability for you to actually get stopped out. So you don't want to have your stop loss all the way down here, and at the same time, you don't want to choke it. You know, if you're looking for scalp, it is a bit different. You use like a 10 to 15 pip stop loss, but for day trade, I think 20 pip is okay, and do expect drawdown with that. So let me know if that is clear. I record, well, I cut the recording already after the simulation, but you know, I'm always here. You can ask questions just the same and get feedback as you go along. So that's, but you know, you can, I'm gonna do another video on how to effectively take entry. I think I might record two videos today. One gonna be on how to take entry. Very important, and where to place your stop loss, because you don't want to choke your trade. I think a member caught, I'm gonna look at GBP USD. A member from the group actually caught a GBP USD sells. Where did this sell take place? All right, let's remove this. So, you know, I did the markup. The markup was also sent in the group just the same. Looking at this support right here, and you know, I was also looking at this resistance right here. You know, in taking a sell here with the break and close below support, I think he actually took it on, think it was this candle, if not right here, but this would have been pretty far. But on the 15-minute, it would have been safe here in taking a entry right here, guys. All right, the best place to actually put your stop loss, if you're looking for longer term play, it's not above the previous candle here at 6 pip. You want to keep it about here at 12 pips, because as you can see here, we have a solid resistance, and you want to keep your stop loss just above this area. And at this point, you're anticipating the market to respect this area to continue to push bearish. And I think overall he made $100. So take for example, if he had used a tight stop loss, probably about here, then maybe the spread would have taken him out, And again, if you're looking to do a day trade, even if you have stop loss above this level here at 17 pip, you're not anticipating the market to actually, pull back and stop you out. You're not anticipating the market to pull back and stop you out. All right, so I think the best place you could have put your stop loss would have been here. All right, so the best place you could have actually put your stop loss would have been here. All right, and then at this point, you would really anticipate the market to respect the level and continue to push bearish. All right, so that's that. And for day trade again, you wanna take your entry and you want to leave your stop loss in, because remember, your stop loss is there to protect your account. So with your stop loss, you're not intended to lose no more than what you want to lose. So take for example, you're risking $1 per pip. You're using a 13 pip stop loss, so the overall risk would have been about $12 to $13. With your stop loss, it is basically allowing you to lose that much and no more. So if the market should pull back and hit your stop loss here, you're not going to lose any more than the $12 to $13. So you want to leave it there for your day trade or your swing trade, and you just leave the trade to see if it will actually push to your destination. So see, the market came down 60 pip. So $1 per pip, you're looking at about $55 to $60 right here with just this one play. So you're risking $12 to $13, and your gain would have been about $55 to $60 thereabout. So this is a thing that I am actually looking at with swing trade. Not to be jumpy to move stop loss to entry, but rather to keep your stop loss in a safe place, to protect your balance, to lose no more than what you intended to. And you would really be anticipating the market to continue to push price based on your analysis, So it's just a risk you are willing to take, because, hey, I am okay with losing $13 to make 50 plus. You are okay with that? You do your analysis, you enter your trade. You know that your stop loss is there to protect you, so you're good with losing whatever you're risking. All right? The gain would have been lovely, $60. So I think scalping, it can work on small account, but it's going to put you under a lot of pressure. It's going to put you under a lot of pressure. So that's the reason why with Signal now, I am looking for a longer term play. So you can enter risking your $1 and you can make $30, $40 with just that trade. That's what I am actually looking at now. So that person, can get some more gain as it relates to PIP and potentially make some more money, But if you are going to scalp, it simply means that, you're going to use a tight stop loss with a high probability of you getting stopped out. Just like this idea again, stop loss was placed in a safe place at 22 pips. I'm not anticipating the market to break above this area based on the H4 and the daily and the weekly time frame. Indeed, the market continued to push bearish to about 85 pips. Same play again here. Gave out this buying idea. The overall move was 100 pip. Had another idea I was looking at on Euro USD again. Didn't really got price to top the area, but it played out well with the pullback right here. I was looking for price to pull back to about here, but at the time I didn't saw this move. I had an alert set up and it missed it by about a pip. And the market continued to push up. Even this pullback here could have got in on this wick, because the thing is, between London to pre-NY, it always do a deep pullback, and I've gotten stopped out and trade like these already. So You know, that's the reason why even with this buying analysis that I sent, I was looking for, you know, probably about 50 pip, but it pushed up to 34 pip, which was pretty okay. Still had my stop loss in the original position. Saw the drop here. Didn't move my stop loss, and again it went back in profit. When I see it start to dance around and the lows here start to get lower, the highs here start to get lower, then I just moved stop loss to entry and I got stopped out. Price did indeed push bearish, but it pulled back in the range and also went back up in profit. But then again, you know, I'm not gonna use a 40 pip stop loss because this pullback was 40 something pips. So I'm not gonna use that to do a day trade or a swing trade. So you just always have to try and find a balance. As you get more experience, you will be able to actually look at the chart to identify levels where you can place your stop loss without getting stopped out if your analysis is correct and the market is pushing in your direction. So let me know if you guys have any other queries. So let me know if you guys have any other question. You know, come on, spit them out. That's how you're gonna learn, you know, guys. You know, you have to ask question to get feedback. And again, what I would like for person to do in the premium group, please share some more charts. All right, you have the analysis section. Share your analysis with the group to get feedback. Don't be afraid to communicate with each other and ask question. It's a community, so you know you speak with each other, share ideas, and then everybody learn together as we go along. Even I can learn something from you just the same. It doesn't mean that I know everything, you know. You can share something that I miss, and then I can look at it and say, okay, it makes perfect sense. You know, so utilize the group as best as possible. So any other question, guys? Boy, everybody's silent. All right, so if there is no other question or queries, then you know I'll see you guys tomorrow. I will be doing a breakdown. Possibly it will be pre-recorded and uploaded in the breakdown section. So again, so the breakdown section here, Asia and London, this is where all the breakdown will be posted. So you can actually go back and look at these. All right, and in order to better your analysis, watch the videos in the breakdown section. All right, and it will actually show you exactly how I go about breaking down the forex market to look for a potential play. So you can really watch that, the database, and you just take your time to go through the TME course section to get you know, get a better understanding. Not hearing you clearly. And this was actually a move I caught in cryptocurrency. So I had like, you know, probably about $400 in the account. And overall with this move, I was able to double that, you know, because the market went up to 100 and something percent. You know, so $400 with 100%. I think I exited about 100%. You know, you would have doubled your money, as I can see the percentage here. You know, so I do trade crypto, but it's in Coinbase in a crypto wallet as well. Nice, very nice. So whenever you can catch these move, just me. And it is the same, you can trade them in Forex as well, but you know, I don't really do crypto in the regular Forex. But you know, I think if we can pull back down to here, and I'm gonna look to buy it back up. Alright guys, so I'll catch you guys later. See you guys later. We should continue to push bearish still. Once we start to break the low, might continue to push bearish. Yeah, price is just ranging. This is the close. And another thing that I want to show you guys, very, very important. This is merely the market close. So you see whenever the market comes to a close, which is like 4 o'clock Jamaica time, you see the spread or the spread increase. This is a 18 pip spread, so you don't want to be in the market at this point. Unless you're looking to do a day trade or a swing trade, then you can say, okay, at this point, if your account can hold the drawdown, all you have to do is to just remove your stop loss because the spread will increase. And take, for example, if you have a tight stop loss, there's a high probability the spread gonna take you out. So all you have to do is just remove your stop loss, and within an hour time, you're gonna find that the market will go back down. So looking at this on the 1 hour time frame, let's jump 1 hour ahead to look at the spread. All right, and remember, you see the spread is what the broker will actually make. So this is what the broker will make. So 1 hour ahead, if we should go 1 hour ahead, then it simply means that the spread should reduce. And as you can see here, the spread got smaller, and as we go more into the session, it will decrease. All right, so whenever the market comes to a close, you're going to see an increase in spread in the FX market. So you want to try and stay out of the market before 4 o'clock and 6 o'clock, between 4 to 6 Jamaica time. So pretty good. All right, so I'll see you guys all right, so commission, usually what I've noticed with IC market is that they charge you roughly 0.7% of your lot size. So if you're using $1 per pip, they're gonna charge you between 70 to 75 cents. $5 per pip, roughly about $3.50, $10 per pip, about $7. But I don't pay commission. I use a standard account because I don't like to look at my account and see what the broker is actually getting. So I just use a standard account. So for the raw spread, you're actually paying the broker, and you will see it reflect on your account, how much commission you pay, and I don't like see that. Broker, they make too much money. You would have to go back into IC market and create a new MT5 account and select standard. So you can change it to a standard account. Raw spread is where you pay them commission. Standard is where you don't pay them any commission. But just bear in mind with the standard account, it's gonna be like a pip bigger. So whenever you're using the raw spread, usually it range between 0.5 to 1.5 pip. But whenever you're using the standard, it range between like 1.5 to about 2.5 pips, which I am okay with that, but it is what it is. Whenever you look, you see the 15, it is actually 1.5. Whenever you see the 20, it is 2 pip. Whenever you see the 2.5, it is actually, whenever you see the 25, it is actually 2.5 pips, basically. All right, so that's but. All right, so the fib. All right, so let's remove everything we got here. All right, now with the Fibonacci, basically it's the same what we are doing in the market. You are identifying swing high and swing low. So looking at the market here, clearly we are pushing bearish. All right, as you notice, we have a high here. We push down, we create a low, pull back to form some form of resistance respecting this area, And at this point, you will anticipate the market to continue to push bearish. With the fib, all you have to do is to toggle it from your swing high to your swing low. Usually what person do, they wait for the market to pull back to respect their golden zone, which is between the 0.5 and the 0.618. So with getting resistance in this area, person would actually look for sell here, and usually they keep their stop loss above the, 0.786 zone and really anticipate the market to respect the level and continue to push bearish. Now, there are other ways you can actually go about using the Fibonacci based on the different levels. All right. Usually, whenever the market push to 100%, which would be from here to here, we anticipate a 50 to 60% pullback for the market to continue to push down to retest the low. So this is how the fib actually come into place. But I'm not really a big user on the fib. I mainly use it to trade on the volatility index. That's what I mainly use it to do. But you can use it on currency pair as well. All right, so you want to identify your swing high and you want to toggle between your swing high to your swing low. And normally whenever the market retrace and respect one of these level, take for example here, you could have took a entry here and keep your stop loss, probably above the 0.7 zone and really anticipate the market to continue to push bearish. So that's how the fib actually comes into play, and you can use it on different time frames. So you can use it on the 4-hour time frame, you can use it on the 1-hour time frame, on the 30-minute, and the 5-minute. Again, you notice on the 4-hour we have a low right here. Person would normally plot it from the low to the highest point, which is here. All right, and as you can see, price came down on the 4-hour time frame and we are rejecting the point, 618. So if person are looking for longer term play, then they would have take a potential entry on the close right here, and stop loss could have been below this level or 50% of this zone, or if you want to keep it here, which would be a bit bigger, but the higher the time frame, the bigger the stop loss going to be actually. And at this point, you're really anticipating the market to continue to push bullish based on the fact that we are creating higher lows, all right, and also higher highs. So this high is higher than the previous. Again, we have another higher high here. This high is higher than the previous. We have another higher low here. This low is higher than the previous. So those are some of the factors you will have to actually take into place when you're using the fib. All right, so you want to identify the current trend of the market, and whenever you identify the trend, you want to plot price from your swing low to your swing high. You can wait for a 50% retracement, but I love to wait on the 0.618 zone because this is actually the lowest point I am actually look for a price to push to get an entry. All right, and in doing that, you can even take entry at 50% between the 0.5 and the 618 zone, because this entire area is known as the golden zone in the fib. So you can take entry here, but for safer stop, it will have to be below the 0.7 zone or about 50% between the 0.618 to the 0.786 zone. So I think there's a video in the TME course section that actually shows you how I set up the Fibonacci. So it's pretty simple. And as you can see here, longer term play, you take a entry with price forming support here. We did indeed retest a high, pull back again, and we get a nice continuation just the same. So this is how you actually go about using the fib. So first, identify the current trend and plot price from your swing high to your swing low. Let's look at see if I can see a potential setup. And it's not all the time the market will pull back to that zone, so that's the reason why I mainly focus on price action. It's not all the time the market will pull back. Again, you have a swing low here. We clearly break above these resistance to the left. So this is an indication that we are pushing bullish. So what you want to do is to wait for price again, pull back to the 0.5 or the 618 zone. And even if you're going to take it whenever we form support here, even if you're going to take it on the formation of this support right here, you take a entry here, you would have ride the move all the way up. And you know your stop loss would have probably been below this area, just to be safe. You know, so that's as it relates to the fib. You know, but I'm not really a big user of the fib. I mainly focus on price action. I just use it to assist with this. Find that it works well with the volatility index. Works pretty good with the volatility index. All right. So as you can see here, this was an analysis I did. I send it in the group. I don't know if anybody took the buy, but as you can see here, potential buy zone. What happened here is that the market pulled back into the 0.5 and the 618 zone, tap the area, you take an entry, you would have went up into some nice profit. So this was actually sent in the group for a potential buying opportunity. So all you have to do just wait for price to pull back to the 0.5618 zone, because it's clear we are trending bullish. We are creating highs and lows, and as you can see here, low, high, low, high. Are we now pulling back the farmer low to continue to push bullish, to retest the high and break through and continue? And the market did exactly that, you know. But it's not a tool that I use apart from the volatility index. So that's on the fib. You're just plotting it from your swing high, from your swing low to your swing high, or the opposite, from your swing high to your swing low, and you wait for a 50 to 60% retracement. Then you know you wait for your support, or if you want to take it as price wicked into the area, that's your option, and then you just manage risk as you go along. But it's a pretty good tool to use. There is no one way to trade the currency market. All right, there's no one way to trade the currency market. So what I'm gonna do also, I need to do another video on this, because in using the fib, it works well with what we call the simple moving average, the 8 and the 50 SMA, and these line acts as support and resistance, you know. So looking at this on the 1 hour time frame, good buying option would have been in this area. And the reason behind this is that we had a low here, we push up, we create a high. The market retraced to about 50 to 60%. All right. And also we create support on the 50 SMA. So this is an indication that the market should continue to push bullish. All right. So you took a entry here, keep your stop loss below this level, and I really anticipate the market to continue to move price bullish to retest the high. You know, so I'm gonna do a video on this, how you can effectively use the fib along with the SMAs, the 8 and the 50 SMAs, to capitalize and plays in the Forex market. You know, but it's really an effective tool you can actually use to trade the currency market. It's really an effective tool, you know. And sometimes you're gonna find that price might pull back to the 0.7 zone, but you just have to manage risk. You know, you just have to manage risk based on that. Let's see if I can find another example. This will be a swing low. Let's do replay. And let's look at this on, let's bring in yeah. So let's look at this on the 30-minute time. So basically on the 30-minute time frame, this would telling you to take a buy from here. you know. But looking at it on the 1 hour time frame again, sometimes these things do contradict themselves. But what you would have to do in this case is to wait for the market to form resistance. All right, so this with this close right here, this would actually be your confirmation to take a sell right here for the market to continue bearish. All right, because at this point, as you can see, both the 8 and also the 50 SMA is about to cross each other. All right, so this is the indication that, hey, at this point, we should be looking for potential sells to continue to push bearish based on the 1 hour time frame. All right, and as you can see, gradually make her way down. You know, and the thing with the fib, most person don't know, with the fib, it is the same as the break and retest. It is the same as the break and retest. The only thing is that it gives you a specific level. It gives you the different level that price can actually pulls back to and respect. All right, it's the same thing as let me just remove and show you guys. I have a swing low here to create a high. You know, I'm just gonna ignore this high here and focus on the swing low. We have another swing low here, we'll create a high. We have another swing low here, create a high. Swing low, again, we'll push all the way up and low, push all the way up. It's the same thing as creating highs and lows, break and retest. The only thing with the fib, it gives you levels that the market can actually pull back to, and these levels are also act as support in the forex market. All these levels are act as support in the forex market. So it is the same as swing high, swing low, break and retest, just the same. So if I should remove this and look at it from a break and retest standpoint, what you will notice here, bam, we push up, we create a high, we pull back, farm support. So even if you take a buy here and you keep your stop loss below this level, even if you take a buy here and you keep your stop loss below this level, you know, at this point, you're not really anticipating the market to break all the way back down here, you know. If you are using the fib, swing high, swing low, 50% retracement, you take your entry, you hold it, you expect continuation towards the upside. Break and retest again. We have a low here, we create a high, we pull back, we farm support. You're looking for the market to continue to push bullish to retest the high, which it did. All right, so it's the same. So whenever you're using the fib, just know that the different levels act as support, and it is the same as break and retest, identifying your swing low and your swing high for potential buying and selling opportunity. Again, we have a support here. We push up, we create a high, we pull back, we farm support, look to take a buy to continue to push bullish. Let's bring out the fib for this setup. Again, your swing low to your swing high. What you will notice is that the market pulls back and farms support in the golden zone just the same right here. All right, we'll get a nice continuation again. We'll push up, we create a new high. So if you're looking for a second entry, you toggle from your swing low to your swing high right here. So from your swing low to your swing high. What you'll notice, the market again pulls back into the golden zone, start to reject the area, you take buy, you get a nice continuation, it take profit at, 77 pip. So this is how you go about using the fib. So it's pretty easy to use. It's not hard. It is pretty easy to use, but I just love to focus on price action. That's my thing. Again, swing low, swing high. You notice here, we break through the 0.6. We came down to respect the 0.7 zone. Person use this level to buy. Person buy from the 0.38, from the 0.5 and the 618. I love to use the 0.5 and the 618 zone. So it's the same option. So you want to identify your most significant swing low and swing high. Again, you have a low here with support. You have another high here. What you notice, create a high here, came back, tap the 0.618 zone, continue to push bullish. Again, even if you're waiting on it to pull back here, we tap the 0.5, we pull down in the 0.618 zone, entry area, you take the entry, bam, the market continue to push bullish. All right, so this is how you actually go about using it. Sells, just the same. You see that we have a level here, you see that we have a low here. All right, price break through the area, but indeed we close back in the 0.618 zone with resistance. See, if you take entry here, you ride the trend all the way down. All right, another scenario, we have a swing high, wrong thing I take out. We have a lower high here, a lower low. You plot it from here to here. We retrace to the 0.5 zone. Bam, the market continue to push bearish just the same. You know, so it's all relative based on what you're looking for and the different levels you want to actually use. But for me, I think the 0.5 and the 618 level is pretty good. You know, so let me know if there is any clarity to that. But I'm gonna do a better video on this and upload it in the TME course section so that person can actually have access to that. But it is pretty effective. But for me, I just love price action, and I try to tell stories with the candles because it is things that I would have seen over and over. So I know the probability of it playing out. So whenever I enter a trade and it goes in a bit of drawdown, you know, I'm not really worried about it because for one, I am okay with risking what I am risking, and I know the probability of this trade playing out. So if it start to go bad, then I just manage risk and call it a day. So let me know if there is any other questions. Alright guys, so if there is no other questions, then I'll see you guys later. Alright, so what I'll advise you to do is to just take some time and just, you know, just go through some setup and stuff like that, because you have to actually put in a certain amount of work in order to see good result. You have to put in a certain amount of work. So if you're gonna be lazy and you don't want to put in X amount of work, you're not gonna see any good results. Alright, so you have to actually put in some work. Alright, so I'll catch you guys later. Yeah, man.